Hey guys, this is a market update. Continued sell-off in crypto today, although we're seeing some of the buyers come back in and possibly looking to buy the dip. I want to talk about kind of investing in the growth space, Bitcoin and crypto, some of the things that I think about psychologically, why I really do not care that this crypto market is selling off right now because of a longer term strategy and fundamental analysis. And I'm just so convicted in the cryptos that I'm in that I just see this as part of the kind of normal market cycle. So I want to go over that and just update you on the Bitcoin price and crypto market prices generally. So we'll get into the video. Before we get into the video, I do have a giveaway in January, so definitely enter. I'll leave the link in the video description, giving away $10,000 of crypto. So go and click that link if you want to enter the giveaway. So like I said, right now, obviously a really important week for crypto, right? So, interest rates have been rising, or at least the Fed said that they should rise, and they actually have risen in the market, right? So the 10-year treasury is around 1.7% right now. So that is actually up from, some of the lows. And obviously the market has taken the Fed at their word, and they've just eased off some of the, kind of the euphoria into the market. So a lot of this is kind of out now, I think. Interest rates have risen, the market has taken that step. So really, the economy looks, fairly good, all things considered. And as long as some of the worries, about supply chain issues and inflation, as long as that subsides, I think, there's not really too much to worry about. So there's a lot going on, obviously, and things change all the time. But I think the market has taken the step down, a massive step down. And we can, maybe look to kind of just start again. So what we see is Bitcoin down from the highs, and yet it really is, it's down. You can see that here, 40% from the highs. And I want to give some context to this. So we're down 40% from the latest high, but if you look at other highs or, other sort of mini tops, this was a 26% move down. This one in particular, if we go to the very low of this, was a 50% move down. That was a very bearish time, and we recovered again. Obviously, the kind of economic and interest rate environment right now is very different to what it was back then. But you can just see, giving you context of drops. This was a 25% drop. So 26% drop. So a 40% drop, from the high is very big, but we were at an all-time high for Bitcoin. So that's just some of the context to this drop, and we are at the same price as we were just a few months back. So, I'm not absolutely capitulating at this price that we are. I think this is a correction for sure, but it isn't a capitulation, and the market is doing its thing short term. But, longer term, I'm still extremely bullish for crypto and Bitcoin. Why would you not be, right? There's just so much that is proving that all of these networks are growing with time. And I'm going to show you some of that data in a minute. But, for the short term, obviously I've drawn this, area of value right here. So obviously 40,000 is quite a psychological barrier, right? As a round price to obviously find as support. And we've actually bounced a little bit today. I would expect it to come into this area of value, maybe bounce around a little bit and just find some support at a level. And then obviously we go again, market cycle goes again. And, people realize that because interest rates in the real world have risen a little bit, the US Treasury in the actual market is trading at 1.7%. It's moved up. Maybe the Fed is, going to raise rates in a couple of months. The market pretty much knows that. And we've had that move already, in my opinion. If you don't have an account with Bybit yet, which you saw me using just then, I'll leave the link in the description. You can get a deposit bonus. Deposit some crypto onto the platform. They'll give you a deposit bonus up to around $4,000. So if you haven't got an account yet, you might want to check them out. The next thing I want to come on to is just fundamental growth in this space. It is not stopping, right? So this is why I have so much conviction when prices fall, and I just really aren't scared away by this volatility. We all know that there's volatility in crypto, and it will continue until that regulation comes in and things start normalizing. Until then, we just have to deal with this volatility. But all the fundamental research I do just makes me have so much confidence in this space and the investments that I have within it. So one of them, just to prove this, and I could do this for an hour, but just to prove this, number of non-zero Ethereum addresses hits 50 million. Now, this was, just last month. 50 million addresses have a non-zero balance, which is pretty crazy. Now, more than one person can have a user address, right? So obviously you have to take that into account. But you can see the number of Bitcoin addresses, number of addresses with non-zero balance just continues going up. So this is fundamental usage data. This is why there's so much excitement. Ethereum addresses as well, number of addresses with non-zero balance, all-time highs. This is why there's so much excitement and, exuberance in prices, right? So we can't control the price. But what you can control is knowing that these networks are just literally exploding with usage and uptake. And that is why I'm so confident despite prices coming off. And there are various economic reasons that are completely out of our control at any point. We never have any control over what happens to the economy or what, the Fed wants to do with scaring people into, pushing interest rates up or whatever. But what we can control is just having a long-term plan to invest in growth areas. If you are a growth investor, and I'm a growth investor, I go into that more in my trading course, my crypto investor course, if you want to check that out. Can't really go into too much in this video, but this just proves it. The number of non-zero addresses is going through the roof. Same here on Polygon Scan. When you're looking at altcoins, if you want to get into altcoins, and there are many opportunities here, but one of the main things that you want to look at is, well, how many people are actually using this thing? And, where is the altcoin at in its growth cycle? Because they've all started at different times and they're, at different stages in their development. But, what is the overall kind of trend rate of growth? And it's pretty clear with all of these blockchains, right? So I don't even have to explain this chart. The number of chain addresses going through the roof on Bitcoin, on Ethereum, on Polygon, and on others. So, when you see data like this and you just think this is fundamentally so positive for these chains, this is an area that I want to get exposure to. And the volatility just is par for the course with crypto. It's not just L1 blockchains that have user growth, of course, but more and more, lots of applications are getting great uptake. And they're doing something that is really important, especially for the growth of this industry and for attracting lots of investors. And that is they're making money. This is the whole point of building these things. And I just want to give you another example of this. And also really, how you can kind of value some applications. So just an example, and obviously no financial advice here with DYDX, but this is obviously a great example that I want to use. DYDX on Token Terminal, you can see that their revenue, this is their 30-day revenue, is $32 million. So DYDX are a layer 2 futures exchange, decentralized futures and options exchange, derivatives exchange on top of Ethereum. They make around $30 million a month just printing money. So you can annualize that, and that's obviously, 360, let's call it, $1 million a year. That is a pretty good business if you ask me. Now you can go down to the data table and you can see DYDX. And what's great on Token Terminal is that they give you a price to earnings ratio. So what they do is they take the earnings of the token or the protocol, and they obviously give you it as a ratio to the market cap, which is currently, you can see, well, the fully diluted market cap is around 7 billion. So fully diluted, that is, quite a 7 billion valuation. Fully diluted is obviously quite a lot. So one of the things that's very different to stocks using price to earnings is that tokens actually have many different use cases. So with a stock, you just know it's a fractional ownership of a business. With a token, there's other things to consider. So I'm not going to go through all of that in this video, but obviously when researching altcoins, you might want to come to something like a write-up on the coin and see how the coin actually works, or the token, I should say. You can see the tokenomics right here. So actually 50% of the tokens will be supplied to traders as liquidity rewards, liquidity providers as rewards as well. And that 50% eventually will be in public hands. So for right now, the token has a lot of different use cases, and some is paid out as rewards for, to get people on the platform. But over time, obviously this token is a governance token. So what we would expect is that over time it will behave more like a stock, right? So it will be basically a proxy for the amount of money that's earned on the platform, and people will buy and sell it based on that. So you can start to give these altcoins basically valuations, and you can see that the current price or the current market cap is, almost 600 million, and the price to earnings ratio, even fully diluted, is only 17x. So when you know that tokens and protocols are actually making tons of money every month, $30 million a month, Axie Infinity is making $30 million a month, PancakeSwap is making $21 million a month, you start to consider, when the price comes off like it has with Bitcoin and crypto's down 40% from highs, you start to think, well, hold on, these protocols are just printing money, and so there is valuation here. So that is something I look at. And another thing that I would look at for sure is really just, if you're a growth investor, going into the growth space and having conviction in that, and obviously buying throughout the good and the bad times, because the opportunity really is investing when the prices are lower, because obviously you have more potential to go to the upside. So obviously, dollar cost averaging over the long term, having a long-term plan to invest in growth overall. None of this is financial advice, of course. It's just some of the things that I think of when I see big dips in the market, and I just think I have conviction in what I'm in because of fundamental data and money-making applications and usage of various blockchains. I go through this way more in my Crypto Investor course. If you have got the course already, you will know that you get all future content free of charge, and I've already recorded 15 videos that's going to be posting in the course this month. A ton more videos left to record. So all of this content is coming free for existing users. The price goes up at that time. The price is going to be going up at the end of this month. So if you do want to check it out with that new content before it comes and the price goes up, do check that out. Also, just the giveaway, $10,000 giveaway in January. So go and check that out if you want. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.